The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. I usually do the noon time, 12 o'clock to 1 o'clock, Tiger Technicians Hour. My pleasure to be here for Larry. Larry's traveling, and I said I would sit in for Larry. So we're looking at the YM, that is the continuous contract of the Dow futures, trading up 287 points at 24,707. So it sounds like, whoa, 200, almost 300 points. Hey, we've been here so many times. In fact, over the past, let's just say 4 weeks or 5 weeks, in points, we've probably traded as much as you would in half a year, or maybe even a year in some instances, if you had to total up the points in the zigzag pattern. Look at the pattern. You're looking at a W pattern, which is just extended to a lowercase m pattern, and it's trying once more to make this V-shaped recovery. But wait a minute, the real thing, and I'm going to do this just for a moment to show you what patterns, Larry loves to talk about patterns that repeat. I always talk about patterns that repeat. I think of patterns as fractals. That is, the pattern that is, don't see your chart. Look, don't see your chart. Let me see, and let me do this again. I thought it was showing. I'll just do that one more time. Okay, there we go. Okay, the chart that I'm looking at is the Dow. And in this little rectangle on the left, you'll see it's got what looks like a lowercase m, but there's a handle to it. So if you think of a price coming down quite sharply, makes a series of lower lows and lower highs, and then it forms an arch formation. I call it the lowercase h. That lowercase h, if it takes out the left side low decisively, has with no more than two, sometimes I'd say three, but most of the time I like to think 2 bars in which to close above that left side low and save the day, and then have another arch or even a V-shaped reversal. Otherwise, you're looking at an H that goes to a lowercase m. Lowercase h extends the arch to make a lowercase m. That's exactly what we've got, except that the Dow went to 23,881. 23,881 yesterday, 2 days ago, and then had a rally that looked like it was going to be a fantastic rally up over 300 points in the futures, and then all of a sudden it gives it all up, goes negative, then closes down for the day. And that's been the struggle. So this lowercase h that goes to lowercase m is now trying for the second W formation, this cup formation. There's another cup formation. So these are really fractals. These are patterns that repeat, but in a smaller time frame, or it could be a bigger time frame, but they repeat. It's like a mirror image that just keeps multiplying. And if you look at the weekly chart of the Dow, that lowercase h inside the rectangle, look at the one on the right. It too is I should say X2, Brutus, because it repeated the same thing. And it did the same thing, except this time, instead of 23,360 as the low in the Dow in February, in April it went just a tad low, it went to 23,344. This time we've gone from 24,122, the low of October, ran up all the way to the 26,277 in the Dow, and then went to a lower low, 23,881. Now what we're looking at is there's a chance, and this is really important because we're making lower lows and lower highs in the shorter term. It's really important that there is a recovery and a bounce that takes the Dow to at least the 24,800 and then perhaps even touches 25,000 before the next turn down, rather than turning down almost immediately. And of course, what do we have? We have the Fed, we have geopolitical news, we have internal, I mean, just what you're seeing in Brexit right now, we've got going on, and wait until January. We've got the same thing between the two parties, and it is a conflagration that is really, it has the potential to become even more intense. That's why I'm suspecting that the high that we've seen in the Dow, 26,951, is a pretty serious high. However, and I'll get into this as we move along, I'll talk about rotation corrections, and I'll talk about rotation slowdowns. In other words, if you're looking at the housing sector, I'm going off on a tangent that I didn't expect to, but it's just really important that I want you to get a feel for at least what I'm looking at. The housing sector since January of this year at 369 in the HGX, Philadelphia Sector Housing Index, plummeting down to the 240 area. Let's face it, 120 points, that's a third. That's been in a mini recession. Yeah, it will slow down. You can call it a recession. That's the one. What about the oil? Look at crude oil trading right now, a little bit higher. It's up 99 cents. I think it's about to have a little bit of a bounce. Trading at 52.65. It's just, look, the MACD's improving a little bit. The stochastic good in the daily. Weekly charts are horrible, so you can only think of this as a bounce that's coming if there is one, and it needs to get to the 55s pretty quickly to be able to say that, yes, that's the case. Crude oil has gone from 76 down to, in the continuous contract, down to 49. Now, you tell me, is that serious? Of course it's serious. Look at this. The weekly chart, I won't talk about the Chapman wave methodology with the peak E top in the monthly chart and the peak F top in the weekly chart and the peak G top in the daily chart. But let's face it, in this sector, this is a recession, if not a big slowdown. But wait a minute, what about the XLK? The XLK is the Select Spider Fund. Yes, it's had a huge move down from 76 down to the 63 level. That is big. But look at that monthly and look at that yearly rally. So there are rotational slowdowns, and certain sectors are vulnerable to further decline and others not. Hey, let's go through this. The ESZ Z18, this is the December mini ESP, S&P, up 30 at 2671, hasn't taken out yesterday's high of 2678, round number high. I think it could try for that. It's got a whole day to do it. This is really important. Leg C down in the weekly chart. When you get to a leg C down, you got to consider that to be fairly serious. It was under the 200 period moving average in the weekly, and now it's above. So there has to be a rally, and that rally, I would say today's Wednesday. By Friday's close, you want to see the S&P testing the 2690 to 2700 level to save the day. Otherwise, we're just stuck with the lower lows and lower highs. Mr. Chapman, this is Larry Pesavento's show. Trade what you see. I'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So the Russell 2000, Basil Chapman sitting in for Larry Pesavento. The Russell 2000 up 11.90 at 40.56, took out the left side low. A, B, C. So it's gone to, it's at 14.56 right now. Yesterday, it took out the left side low of about the end of October, and it went to 1420.40. So for the Russell 2000, and the monthly looks really poor. In fact, for now, I'm going to make this, I've got it as a peak that's in a sell signal. I have to wait till the end of December to update this to say that it's in a sell mode. This is the monthly. The daily and weekly have already done that. This is not good. This is really a very negative thing, and you can't, these are the soldiers. You can't have the soldiers going one way and the generals going another way. So this is really important because it's saying that in the Russell 2000, these are the smaller caps, there is no real participation and no leadership to the upside. That's going to make the Russell 2000 pushing into the 1500s in December really imperative, because if it cannot do that, if it stays here underneath 1500, for even another week, that's just, it's going to make it really tough to change the daily and weekly negative chart formations to turn them positive. Of course, until you get those positive, you're not going to get the monthly to change. So we're watching this very closely. Now, I need to look also at the TLT, which is the Lehman 20-year Treasury bond ETF, trading at 118.47. It made a high yesterday, a recovery high of 100 and I think that was 119.20, was it? 119.38. So it's pulled back. What's really important is that it started to close a couple of times above the 200-period moving average of 118.28. You know, we've all got our different techniques. Larry doesn't use moving averages at all. He's got a fabulous set of techniques. He doesn't, this is just not part of his repertoire. No big deal. Everybody has their own tools. I'm just saying that my contention has been for a while that at some point we'll see the Dow and the S&P and the NASDAQ 100 start to slide. And if they slide and make people nervous enough, money will emigrate. Money will migrate from the equities into the so-called security and safety of bonds. In a way, we've seen that, but really, yes, the Dow's made a lower low, the S&P hasn't, and the NDX hasn't made a lower low from the October lows, but at the same time, we're really looking at nervousness, and for the first time, for about a week and a half now, people I play tennis with or people I bump into who I know, the first thing they're saying, as soon as they get an opportunity after the requisite, hi, how you doing? They look at me and say, what's happening in the market? Well, let me tell you something. What's happening in the market basically is that we've gone sideways for about a year. So if you're looking at the bonds, look, where we are at 118, look at the monthly chart of the TLT. We've been here many, many times since 2017. That's just not a big deal. The big deal is the trend. And the trend, and X, the 10-year, is really what most of the money, most of the rates are calculated on the 10-year. That is interest rates or leases or whatever it is that really treats a yield as a benchmark. It's the 10-year that's used. The monthly chart, let me just make this much, much bigger. Look, the monthly chart has made this huge cup formation. In a shorter period than the left side, right side price time. Actually, let me just quickly explain that. There are periods where there's a price formed, there's a sharp pullback, and then a rally, or there's a price formed and a sharp rally and a pullback. And you can measure in time the number of bars on the way down to a particular candle of importance or a moment of importance that starts the reversal of the trend. And then more often than you can anticipate, you will see the same number of bars to the upside going back to where it was, or if it's on the downside. And look what happened here. From the high that was made in the TNX back in December of 2013 at 30.36. And remember, this is a sliding number because the date is exactly right. The prices, the moves are exactly right, but the actual number, because it gets reconfigured, is slightly different. But let's take it from the high that was made back in December of 2013 in the monthly chart. It plummets down to 13.36 July of 2016. And then in a slightly shorter number of bars, it breaks above it, but it really only closes above it about 4 months or 5 months quicker. So over a period of 2 years, 2014, a period of 4 years, it does it in slightly less. But look at that beautiful cup formation. Breaks above, does close above that high of 2012, December. And then what does it do? It pulls back, holds this black line, which is the 14-period moving average of 28.22. Now it's just on the 9-period, the green line. And the MACD is turning down, but hasn't crossed negative. Stochastic's turned down, but is still at 84%. That's very good. I think yields are kind of stuck. Now, that tells me a couple of things. What we're seeing in yields is this very broad trading band between the 31.15 May high and 27.59 June low of 2018. It goes slightly higher and then slightly lower in terms of the magnitude of the price decline, but we're really in a range. And that range is essentially telling me the same rotation that we've seen in what I called the economic slowdown in oil. So that means that jobs must have been dissipating. In home building, same thing. So we're seeing rotating all the way through. And then the strong indexes, like there are some stocks that are just, I mean, let's look at Microsoft, for instance. A Microsoft, look at this, trading at 116.18 was October high. It's trading at 110, 6 points, big deal. Hey, 7% or something like that, 8% below its all-time high, trading in this higher level. So it depends on what you're looking at. So let's go to high-grade copper, talking about a recession or slowdown international. High-grade copper has had this huge move to the downside from up at 3.40. It goes down to the low. I didn't type that in. It should have been down to a low of 2.66. Hey, that's a big move. Now look at this. Look at the cup formation here as well. The cup formation going from the 2014 level around about 340, pulls back all the way down to below 2.2, and then it rallies sharply, and it comes back and it stalls at 3.40. So this is making a kind of a cup and ladle, not one of my favorite patterns, but it's really important because of what it's saying is, together with internationally with wood, which is the iShares Timber and Forestry ETF, which was at 83 and is trading right now at 60, 20 points down, that's a 25, 26% decline. You're talking about a rotation of slowdowns internationally and domestically. And that's really what we're looking at. So it's very important, the market's about to open in a few minutes, that there's some kind of a really good rally here. Otherwise, we need to look at the United States, which was leading, starting to see a slowdown, and that's what we got to worry about. I'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, after that Mozart introduction, Basil Chapman sitting in for Larry Pesavento, Trade What You See. And what do I see? I see that the Dow is up 262 at 24,633. The S&P is up 30 at 2667. But look at the E-mini. In the Chapman Wave methodology, just let me do this very briefly. In the Chapman Wave methodology, what we look for is from the identifiable low, you want to count each successively higher peak, alphabetize them, uppercase on the way up, lowercase on the way down. You can go from A to a G. D, the fourth highest peak, is where other things can happen. There it is, peak D. Okay, let's look at the real thing here. The E-mini 2-minute chart made a peak E, pulls back quite sharply. Look at this in the 5-minute chart. There's that peak D, hasn't crossed negative yet. In the MACD, it's just about to. Yep, there it goes. So we can put a down arrow here, and then we start fresh again. So down arrow. It's holding very well, but I'm going to wait for it to cross. This is still just a D with a plus sign. It hasn't turned down. Oops. So that does not get a plus sign. I mean, a down arrow, it gets a plus sign. In the 5-minute chart, it did not go underneath the 14-period moving average, and the MACD has not yet crossed negative. If it does, that'll change from a plus to a down arrow. Then we've got to kind of start over again. And okay, that's enough with that. So those are purely technical. It's at 2671. If it starts to trade at 268, that means that not only the 5-minute chart, but there's a good chance under 267, that is, a good chance that the 10-minute chart will get a down arrow, and that'll say, for this particular phase, this 2-minute chart has gone to a sell mode. The 5-minute is in a sell signal right now, about to go to a sell mode. And the 10-minute chart, nothing yet to see there. So that's the way I look at it, because this could be a 120-minute chart, the 2-minute, a daily could be the 5, and the 10-minute could be a weekly chart. So we're looking at time frames. Remember, the fractal has the same thing, makes a top, pulls back, makes a top, pulls back, makes a top, pulls back. All right, enough for that. Let's get to the nitty-gritties. What we really want to be looking at here are how are certain sectors doing. And it's going to be very important today that we look at, in this particular case, I'd like to follow gold a little bit closer. Gold right now is trading up 2.7. My contention has been that if gold was to become the fear factor that it often is in really scruffy times, that's when you would see, if the XLF, the bank sector, and this is really serious, the S&P Select Financial Spider Fund has gone to lower lows in the monthly charts, sell mode, in the weekly charts, actually in a leg F to the downside. On its, I better just get rid of that. Getting on its way towards 2364 is a 200-period moving average, and I suspect it'll get there in the weekly chart at some point, maybe in December. But look at this arch formation. Remember the lowercase h that creates the arch? Look at this right here. And what are we seeing? We're seeing that it took out the left side low of 2502. It took it out on a closing basis 3 days ago. So this is the third day. This is the third day. It's imperative that the XLF closes above 2502 today. And if it does it today, kind of saves the pattern a little bit and says, all right, now they could have a bounce towards the 2545, 2575 area. But let me tell you, if it fails to do that, and instead takes out the low that was made just 2 days ago of 2430, and it's trading at 2478 right now, only up 26 cents. If it does that, that's just not going to be a good sign at all. And if you look at something like a Goldman Sachs, which is usually over the decades, actually since 1929, has most often been a leader in bull markets, this is not so great. Okay, question I had in the den, Basil, can you look at Netflix? You see, my big concern here, and the sell signal that I had in the Dow the day after the all-time high of October the 4th, on October the 3rd, it's actually where we went short for a real nice trade down to the 25,000 level. That was really important because within the context of looking at the different sectors, I've been saying for a while that the FANG stocks, Facebook, Apple, Amazon, Netflix, and Google, I like to say Google rather than Alphabet, I don't know where they got this Alphabet from, they were not looking good at all. And that I was suspecting that there could be hat-trick tops, meaning the daily gave a sell signal, then the weekly, but then the monthly concludes that whole move to the upside by taking a big time out, because the biggest, the longest, the most impressive time frame is monthly. When you get big signals in the monthly chart, you can go for a long time in that direction, but this time it's down. So if you look at Netflix, the all-time high of 423 made in July of 2018, peak F in the Chapman wave, weekly chart, and monthly is peak E. That just said, be careful. There's that H pattern. I drew it in. Look at that H pattern right there in Netflix in the weekly chart. Takes out the left side low and couldn't go back there and hold. And now it's way down 250, trading right now 269, up 4.80. To me, that's not. I would not be touching Netflix. I think that Netflix is going to be under tremendous pressure, S&P in the den. And I also think that if there is a rally, it won't go much. The 312 level is the 200-period moving average. It's just tremendous resistance. And that's 40 points from here. It's about another 15% high. No, I think that there could be a bounce. In the best case is another lowercase h, and the best case would be the 285-ish area, somewhere in the 280s, and then it reaches very strong resistance. I'm afraid that I don't see it. Look, Facebook, same thing. Facebook made a high, an all-time high. It goes from the 18s to 200. Where's Facebook? 218. That was back in July. It's trading now at 143. It made a low of 126.85 on the 20th. Oh, that's a nice rally, 17 points. But leg B is in leg C to the upside in the daily, but that monthly chart says, wow, there could be a bounce. And I am anticipating that even the FANG stocks could bounce here, but I think there's a retest, and a 200-period moving average of 137 in the weekly chart is going to be really important for Facebook. Let's go to Amazon. Amazon, this is the season for Amazon. And we see Federal Express plunge. This is the delivery part of it. UPS has not been very good. And up 23 in Amazon, stuck in a range. There's the lowercase h trying to make another M-shaped pattern right now. Just stuck. I see a hat-trick top in Amazon as well. Apple is under very serious pressure. It's trading up $1 at 169.80, making lower lows and lower highs. Peak D, there's that peak D, and the monthly chart is 233. And where is it trading now? 169. I'm afraid, and Google, I'm going to say Google as long as I can. I don't like Alphabet. So doesn't matter what I say. There's a hat-trick top, peak D in the weekly at 1273.89. Well, we've got Victor in Paramus, New Jersey. Victor, how are you?
Good. What did I say? First, this reminds me of 2008 going into 2009. If you overlay that to this year's Victor, we're going down.
Victor, we've got a break coming up. I'll come right back to Victor in a moment. Hold tight. The Dow is up 298. We'll be back with Victor in Paramus straight after this break.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Hi everyone, Basil Chapman sitting for Larry, the one and only Larry Pesavento, and I will be back. Doesn't sound. Yeah, we're going to Victor in Paramus, New Jersey. Victor, you want to look at LOB, which is Live Oak Bankshares Inc., trading at 14.19, up 51 cents, correct?
Hello? Hello?
Oh, so the question I have is, what are you doing right now with it?
Well, here's the deal. My somebody in the family works for the bank, and it's back to the IPO price. So he says they're busy as anything. Goldman Sachs owns a share of them, and what do you think?
Wow.
The gaps have all been cleared up.
So I don't know what their problem was, but this is
exactly.
a stock. This is a stock that was down at 12 back in January of 2016. In the chart wave, it goes to peak A, peak B, peak C, higher high, peak D, and then it even goes to an E and an F. And that peak F right in July of this year at 32.95, so it has almost a 3 times gain, it's like a 280% gain. And then someone notices that maybe there's a little problem, and it goes in 1, 2, 3, 4, 5 months. It goes from the 32 area down to where it's trading. Yesterday was the low, and it's trading right now at 14.19, just off the low. So wow, this is really tough. So they were given shares at the IPO, so it's below, they're making money right now, but they were making a huge ton of money. I don't know if they took anything off or whether this is a long-term situation where they say, we're just buying and holding. But I would tell you, there is something going on. And was there an announcement yesterday? Let me just check this out here. Let me go, give me 1 second.
I think somebody gave it a downgrade. That was it. No, he says their business is booming. I know somebody who works there, controls the company. I don't understand. What are they doing?
That's really tough because they could be on. Now, the way I would put it this way is that the business could be booming from the teller side. In other words, a lot of people are coming in. No headlines. I don't have anything here as a headline. It's
more of for doctors and lawyers. You do everything over the phone and you borrow money. That's it. They don't even have it. They don't even have offices. Everything's done on the internet. Maybe more people are getting into that whole area and saturating it. That's what I'm reading.
Boy, this is so tough because this is right now the candle that we saw yesterday. If I had a huge volume, if I saw, what was the volume? The volume should have been major. It was about 1 million shares, not even 1 million shares.
Yeah.
1 million shares, it's not, if yesterday was 4 or 5 million shares, I would have said to you, wow, that's exactly what I like to see. I call it a culmination of, it's called an inverted spike. In other words, a spike to the downside. And I call it a volume buy signal. In other words, I would have said spectacular volume. Everyone was just getting out of this thing. Now there should be a rally for 28 measures. That would be 28 daily bars. It should not take out, as long as it doesn't take out within like 3-4 sessions, it shouldn't take out 1346 was yesterday's low. And it's trading at 1437 right now. I didn't get that kind of volume spike. If I did get it, I would have said to you, wow, they'll have a chance to reassess because you've got about 28 days. And if it holds strongly above the low that was made yesterday, that doubles. It goes from 28 days to 56 days. That's a long time. I can't say that right now. In fact,
do you think that was institutional selling yesterday? Like a big block, somebody just getting out of the...
Yeah, I think there were, but it's not big enough for me. It's not to say everything's done. I think there's still another shoe to drop. And I would say to them, look, if you haven't taken any money off, take at least a little bit off. Just something's going on that is not good. Just make sure that you've got a really nice gain, a massive gain. If you haven't taken anything yet, this is your opportunity just to get a little bit off. You can always put that back in, even if it's at a higher price, but you want to be putting it back in on the way up when the tide has changed from going to low tide to going to high tide. Wow, I don't want to tell these people what to do because there's a whole bunch of implications.
The whole banking sector is getting beat up. This happened in 2008, and then 2009 came, and they beat the hell out of it.
Correct.
We're going back down to when President Trump was elected, at least 1,800, 1,900 in the S&P.
Well, I don't know about that. I do see that there's a rotation correction continuing.
Times it by 2 or 3, and that's where we're going.
So, okay, Victor, I'm just going to say to you, if you ask me right now, would I buy it or would I sell it? I'd say I'd have to wait at least 3 sessions. I don't want to see that left side low taken out. If that left side low is not taken out, it could go back to yesterday's high, just above 16, maybe 1640. And that's the only way I would do it as a trade. But please be careful. Tell them just to be, something's going on.
Isn't today Weird Wally Wednesday where everybody has to be delta neutral too?
You're probably right, but this is a market where I think that all the norms are being thrown out. So, Victor, just tell them, consider their situation and maybe at least take a little cash off. Something is not right with this bank, and they better be careful. Hey, thank you for calling, and thank you for looking after them.
Take care.
You too. Okay, folks, so let's get back to the nitty-gritties because he was talking about LOB, which is Live Oak Bank shares trading at 14.38. Hey, it could have been a low yesterday. It could have been a culmination low. I don't see it that way. The MACD's negative. Stochastic is down at 15%. Could still go to 7% again. It's been in the single digits. When you see this type of thing, you should have taken some kind of precaution. When it broke 18 or 17.80, the key support, that was the time to say, that's my stop on some of my position. It's 4 points lower than that now. Please be careful. Okay, now there are a couple of things I want you to do. Why is this an important session? Look at the futures that we just were looking at a moment ago. Now you've got a down arrow in the 2-minute chart, right? 2-minute chart went from the high of 2677 round number high, and it's trading right now in the 2662. Hit the 200 period moving average. That should be some kind of a support. Still up 23. Peak D in the 5-minute chart, that gets upgraded. It would have been upgraded before, but I was talking on the phone. Upgraded to a down arrow. Now you have to kind of restart the whole thing, making lower lows. That's not good. And now I have no choice but to put a down arrow in the 10-minute chart, and the MACD is just about to cross negative. The day is young. There is so much news going on. I say to subscribers, we're going to stick with the ETFs for long positions right now because it's just too dangerous. We had some really nice positions in a couple of stocks yesterday. One got taken out for a small loss, a percentage loss. Another one was break even. We are still long the Qs because I think that the Qs have a chance as an oversold condition to rally. I need to do a couple of things right now. I need to show you something. I just wanted to have a look at the crude oil because I want to look at the USO. Crude oil is up only 78 cents now. The USO, this is the trading vehicle. I know a lot of you do not trade futures. Let's look at the USO, which is up. There's a break coming. The USO is, in fact, United States Oil Fund. Now, of course, some of you might be able to trade it overnight. Mostly, we look at it between the hours of 9:30 and 4. It's up 15 cents at 11:10. It needs to get 1180s in 2 days with crude oil rallying, and that'll be a first good sign. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So this is a short section, so let me just do a quick wrap. The Deutsche Bank, there's some news about Germany intensifying plans, thank you, Ruby, to fix Deutsche Bank with a merger. It better be a big merger. It's at 8.82. It's up 49 cents, up 5.88%. It managed to make some kind of a low 3 days ago. This is an ugly chart. This is like the bank chart we just looked at. Let's look at the German index. This is the Dow Jones Germany Stock Index. It is trading now at, it's up 1.36%, made a lower low 3 days ago. It looks like the Deutsche Bank, wow, isn't that interesting? Is making a trough G in the weekly chart, G/C, way under the 200-period moving average. You know, I'm looking at all these internationals. Everybody was asking me just a month ago, what about the EEM? And I said, just be really careful. Yeah, I could see the EEM having some kind of a bounce, but it is just, it's not where you really want to be. As we're wrapping up, I'm going to tell you what I'm looking at. The VIX index, which is trading right now down 32 cents at 21.44. That's not a big down move. It's still in the 20s. So watch this real closely. I'm going to make it real simple. I'll be doing my show at noon. In another 2 hours' time, you've got Tom and Tommy coming up, and then you've got trade think or swim. So I'm saying to you, what's really important right now is that if I'd said at 110 this afternoon, the S&P needs to be above plus 16 or more. It needs to be above plus 16. That is to say, okay, you could rally fairly okay into the close. But if it's under that, it's like yesterday. It just keeps fading. And all these rallies, it's like you're using up energy. You're putting your foot on the gas. Unfortunately, you're in quicksand or on ice, and you're getting wheel spin. You're not going forward. And every time you do that, you're usurping energy and power. So I'm looking at the chance for at least a decent bounce here. If it fails, that's really not a good sign. Thank you for being here. Basil Chapman sitting in for Larry Pesavento. I'll be back at noon. Check out my opening call newsletter. Thank you for being here.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.